You don't need thousands to start investing. $100 is enough if you do it right. Starting with $100 won't make you rich overnight, but it will put you ahead of most people who never start. In the next few minutes, I'm going to show you exactly how beginners can start investing with $100 step by step. We'll do it safely, realistically, and without any gambling. Let's be very clear about what this is not. This is not a day trading. This is not a get-rich-quick scheme. This is about adopting a long-term mindset. First things first, let's make sure this $100 is actually ready to be invested. Investing money you'll need soon is one of the biggest mistakes you can make. So ask yourself a few questions. Do you have at least some basic emergency savings set aside? Have you paid off any high-interest debt like a credit card balance? And critically, is this $100 you know for sure you won't need in the next 12 months? Here's the simple rule. If losing this $100 would cause you any real stress, don't invest it just yet. Wait until you have $100 that is truly investable. Okay, so your money is ready. Now, what's the right type of investment? With $100, your goal isn't to become a master stock picker. Your goal is to get experience and exposure to the market while learning the ropes. You could try to buy shares in an individual company, but that's pretty risky. Your entire investment would ride on the fate of that one business. A much safer and smarter approach for beginners is to use ETFs or index-style investments. Think of these as baskets that hold tiny pieces of hundreds or even thousands of different companies. This gives you instant diversification. This is all made possible by something called fractional shares. It's a game changer. It means you don't need to afford a full expensive share of a fund. You can just buy a small slice of it for a few dollars. The most important rule for a beginner is this: prioritize diversification over the excitement of picking one stock. So that brings us to the next logical question. What exactly should you buy with that $100? Now, I can't give you specific financial advice or tell you what ticker symbol to buy, but I can give you the principles. You want to look for something that gives you broad market exposure, meaning it represents a huge chunk of the stock market, not just one niche industry. You want something with extremely low fees because fees will eat into your returns over time. And you want something that aligns with a long-term focus. The best structure for your first $100 is to put it all into one single diversified investment. Don't split it up into 10 different $10 bets on random companies. Keep it simple. Remember this: complexity early on increases your chances of making a mistake. It does not increase your returns. By the way, if simple beginner-friendly investing explanations like this are useful to you, this channel focuses on helping you avoid those common mistakes and build solid long-term habits. All right, you've chosen what to buy. How do you actually place the investment? When you go to buy, you'll likely see options like a market order or a limit order. For a long-term investor buying a diversified fund, a market order is usually fine. It just means you're buying at the best available current price. The key isn't trying to get the absolute perfect price down to the penny. You don't need perfect timing. Consistency matters so much more than timing. Your job is simple. You buy, you hold, and you avoid the obsessive temptation to check the price every single day. That behavior will only lead to anxiety and bad decisions. Now, let's talk about the traps. What should you absolutely not do with your first $100? It's so easy to get pulled into the hype of day trading, buying and selling constantly, trying to catch tiny price swings. Don't do it. It's also tempting to jump on the latest meme stock you see trending on social media or to act on a hot tip from a friend. Resist that urge and avoid constant buying and selling. It just racks up potential fees and taxes and rarely works out. Let me give you the hard truth. The fastest way to lose $100 is by trying to turn it into $1,000 in a week. Real investing is a get-rich-slowly process. This brings us to the most important step of all, turning that first $100 into a habit. The real power here isn't in the single $100 bill, it's in repeating the process. Your goal should be to invest small amounts regularly. Maybe it's $25 a week or $50 a month, whatever you can afford. The best way to do this is to automate it. Set up a recurring transfer from your bank account to your investment account so it happens without you even thinking about it. And as your income grows over the years, you can gradually increase those contributions. This is a crucial mindset shift. You have to start seeing investing as a system you build, not just a one-time event you perform. So let's do a quick recap. Only invest money you can truly leave alone for a long time. Keep it simple and diversified. Don't try to be a stock-picking genius on day one. Avoid making decisions based on hype or excitement you see online. And most of all, focus on building the habit through consistency. Starting small is infinitely better than waiting forever to start big. $100 won't change your life today, but the habit you build with it absolutely can.